Welcome, everyone, and thank you for joining us today for what I know will be a fascinating discussion on transforming finance. Tech is everywhere. My name is Matt Brown. I'm the founder and CEO of CAIS, and I'll be your moderator today. I'd like to thank the Milken Institute for giving us this great opportunity to have a very engaging conversation on a very relevant topic. We are joined today by an amazing group of panelists, all experts in their field. I'm going to ask each panelist to introduce themselves before we dive into our first question. Ellie, could I start with you with the introductions, please?
Hey, thanks for having me here, Matthew and team. The name is Eli Rosner, and I'm the Chief Product and Technology Officer at Finastra.
Great. Mohit?
Thanks. It's Mohit Joshi. I'm the president at Infosys. I have responsibility for our financial services and also software business. And I'm also part of the advisory council for the Milken Center for Advancing the American Dream.
Great, thank you. Melissa?
Hi, it's great to be with you all. I'm Melissa Koide. I'm the founder and CEO of a nonprofit research organization based here in Washington, D.C. called FinRegLab, and I stood this organization up after leading the Office of Consumer Policy in the U.S. Treasury Department for 4.5 years. It's a pleasure to be here. I'm also pleased to share that I am an advisor to the Milken Institute on many matters related to data and technology and its use in the financial sector.
Great, well, welcome. And last but definitely not least, Munish.
Hi, I'm Munish Verma here, managing partner at the SoftBank Vision Fund based in London. Matthew, thank you very much for having me on what I'm sure will be a very interesting panel. Looking forward to it.
Yeah, well, thank you all very, very much. So let me just dive right in here. We all know this has been quite a year. And the first topic that I want to touch on is technology advancements in the time of COVID. It's been said again and again that technology has made 5 or even 10 years of advancements in these past 7 months. I think we'd like to know, what exactly does that mean? What is the impact of that, either positive or negative? And if you can, please give us examples that we can all relate to. Ellie, I'd like to, again, just begin with you and very much welcome and want to hear from all our panelists on this topic.
Sure, thank you, Matthew. So look, I would say that absolutely technology has accelerated, and several technologies that have been emerging over the last several years, like cloud and AI, are now taking more center stage. The sense of urgency around adapting those technologies has significantly accelerated. And the banks today feel that they have more permission, in quotes, to make more radical changes to their operating model. A research that the World Economic Forum did, that the consumers, the customers, 60% of them said that they're more willing to buy digital capabilities. And that's a significant increase from a couple of years ago. So the banks, from a technology perspective, said, look, we can't just stand still. It's no option. Digital is no longer a nice to have. It's a business continuity issue. That's what digital has turned to be. And the discussions that we have with our customers are turning into, let's talk about cloud and AI, or, well, we're thinking about it, to how can Finastra help us accelerate the journey that we have with those technologies and leverage them? How can we leverage cloud more? How can we leverage artificial intelligence more? They recognize the fact that those two technologies are foundational to expanding into the IoT, the 5G, the quantum computing, the distributed ledger technology, and other technologies. So obviously, the negative impact of this on society is primarily around cases where people were suffering, communities that were suffering. And in some cases, it put back quite a bit of the progress that we made as a society around equation, inclusion, and poverty. So, and it's happening really fast. So the technology improvements enable us to move really fast in order to provide benefits. So, for example, 60% of the loans for community banks were delivered in about a month or so, and it's a year worth of lending that went through the pipe in 1 month. At Finastra, for the Paycheck Protection Program, we processed over $6 billion in loans to help millions of people during the crisis. So another thing that happens with regards to technology and being more open, I would say, is that the banks now recognize they're more open to participating in this new digital ecosystem that's being created, and do it for the following reasons. First and foremost, they understand that sharing data within the industry, as well as with other companies and entities outside the industry, can be very beneficial to their business, can improve the customer experience that they have, whether it's a consumer or a corporate. They're looking for better solutions to deliver to their customers. So they're more open to look outside and kind of look behind what we call the not invented here syndrome. And the third point about technology and changes that it has caused to the banks is that there are opportunities for them to leverage emerging business models like bank as a service. So essentially turning a cost center into a revenue center and taking the technologies and the capital that the banks have invested in and making those available through different means to other banks as well as non-banks.
Eli, let's go back on that, turning that cost center into a profit center. Could you give a little more detail on that? And that's something that not a lot of us have thought about.
Sure. So think about a bank, for example, at Finastra that has bought one of our core solutions, whether it's cash management or payments. So the bank now is capable of using what our platform that's called FusionFinTech.cloud to take the investment that they made, for example, in payments, and provide payment as a service or payments clearing as a service to other banks, not just their own banks, but anyone else who wants to consume that service. That's essentially what bank as a service means.
Got it. Very interesting. Munish, you're the only VC investment fund on the panel. Are you also seeing, well, let me start with the original question. Are you seeing this speed? Is this that we're talking about, the advancement in the short window of time accelerating beyond? And also, are you seeing some of the trends that Eli is mentioning in terms of taking some of these legacy cost centers and turning them into profit centers? And is that an opportunity for you as an investor?
So I'll tell you that, look, if you look at what's happened in the last few months, right? I think financial technology, financial consumption on internet platforms, etc., digital wallets, digital payments, all increasing. They've been accelerating before the pandemic in any case, right? What the pandemic has done is made that even faster. And one significant thing that's happened to my mind is folks of a certain demographic that perhaps had not been using digital platforms to transact online, buy stuff, or use digital wallets, those folks, I think, have started transacting as well. And I have a personal anecdote to this. My parents, who are elderly, live in India, obviously never paid attention to a digital wallet, didn't order stuff online, didn't transact, didn't pay their utility bills online. All of a sudden, for the last 3, 4, 5 months, they are using it. It's made a fundamental difference to their quality of life on a daily basis. And I suspect part of this behavior will stick even after the pandemic has gone. So I think this shift that's happened, more people using it, it's solving people's daily needs, making their daily life better. That fundamental shift in consumer behavior, I think, will persist with us, or a large part of it will persist with us even after the pandemic is over. So definitely, I think the last two massive acceleration will stay.
And if you had to think about one thing, though, that concerns you, I mean, speed, and we're going to get to that a little bit later, but that's a fairly substantial window of time to be able to compress in terms of technology adoption and development. What are some of the concerns that you have for yourself at SoftBank or for the portfolio companies that you invest in? How are you guiding them right now?
Well, look, I think one thing that everyone recognizes, right, that unexpected events can take you by surprise. And the question is, when the pandemic hit, we worked very hard with our portfolio companies, with our founders, working with them through whether it was operational issues, expansion issues, whatever it may be. And I actually am quite heartened and gladdened by the fact that our ability to work with our founders, portfolio companies, for them to deal with this change. And in a lot of cases, this has had a very beneficial impact, right? So if you think of a fintech business called Paytm in India, the number of people that are using Paytm now to make payments is greater than what it was before the pandemic, simply because offline payments or offline channels are dark. Similar with insurance distribution. So look, I think no significant concerns per se. I think it's shifted very quickly. I think the landscape has shifted very quickly. But I'm equally cognizant of the fact that there's a long way to go as yet. And again, picking on a country like India, digital payments have had a massive rise, but still represent only 15% of transactions in the country. Right, 75% is still cash. So yes, a lot of progress, a lot of quick adoption, but a long way to go.
Yeah. Mohit, when obviously from your seat at Infosys, you you have a pretty broad view of the landscape here. You and I were talking at one point, talking about the how the pandemic has changed the experience of banking, insurance, and healthcare in a lasting way. I assume you're agreeing with this window of time that's been able to compress the speed and development. So maybe we could just talk about specifically from your point of view, how has it transformed these areas, and how are you handling it at the Infosys level?
Sure. So I think, look, for all of us, the speed and the globally synchronized nature of the lockdown, I think it caught everybody by surprise. And to be honest, if you'd asked me in January, I would have thought that some banks would have made it. But the reality is that the investment that had happened in technology, specifically on the cloud, that really paid off. Because you think of it, right? You think of banks that for tens, if not hundreds of years, have had everybody working at the office, have had very strong restrictions on even the sort of devices you could get into the office, the amount of access that you had to the external world, were suddenly having 100,000 employees working from home. And this is at a time when volumes were really spiking, right? So we spoke to a large bank in the UK, and they'd gone from doing 400 mortgage deferrals a day to doing 40,000 a day. So think of it. You have all your employees working from home at a time when volumes are spiking. I think the fact that everybody made it is quite honestly nothing short of a miracle. But it worked. And I think in the first phase, the focus was very much on how do we get operationally resilient? How do we get a minimum level of productivity and security, for our teams? And over time, the focus very much moved to strengthening security. I think in the initial days, everybody was shocked at how productivity levels had improved, and everybody attributed it to some sort of a measurement error. But I think over time, people have become comfortable that you've actually seen an increase in productivity because, surprise, surprise, employees prefer to work from home. And I think that's the second phase. And the third phase is very much thinking about the future, right? And when financial services companies think about the future, it's about how do we shape the cost curve for the future? Because clearly, in a low interest rate environment, in an increased loan loss environment, the economics are going to be difficult. So, how do you shape the cost curve for the future using technology, using automation, using AI? But equally, because your digital storefront is the only thing available to you now, how do you look at customer journeys in a big way? How do you build additional tools for your clients? But equally importantly, maybe even more importantly, how do you build additional tools for your employees? Because historically, there was a lot of focus on consumer facing digital, but very little focus on employee facing digital. Employees were expected to work their way through a myriad of applications to respond to customers. And so I think this doing things, for healthcare, for financial services, of bending the cost curve through industrialization and digital, right? In terms of data, in terms of experience, in terms of cybersecurity, in terms of IoT. I think these two themes are going to shape the future of the business.
I don't. I think that's absolutely spot on. You mentioned something, this gigantic move of work to home or work from home. Excuse me. How have you thought about that on a global basis? And are you seeing any early signs of concern, or is it all just going as planned? There's been so many reports on the surprise around how seamless it's been for our industry. What are some of the other sides of that coin?
Sure. So look, at Infosys, we have 250,000 employees across the world, right? And as of today, 99% of them are working from home.
Wow.
We've never had higher employee satisfaction survey results. We've never had lower attrition. We've never had higher productivity. Security remains extremely robust because of the investments that we've made and because of the processes we've put in place. We've also had, our highest ever customer satisfaction, right? So clearly this is working. Like I said, in the first couple of weeks, a lot of our clients thought that the productivity metrics were an error, right? That you weren't measuring the right thing. Over time, I think they've become comfortable that productivity really is higher. And clearly, after the exuberance for employees, there is a plateau that has been reached, right? And clearly, it is impacting some demographics, maybe younger, junior employees more. But on the whole, candidly, I haven't seen a wave of people calling me or calling, the executive team at Infosys asking to be led back to the office. There isn't that bottom-up push to come back to the office. Maybe 10% of the people want to come back. Most employees are actually reasonably satisfied with the way things are working. Clearly, we have to give them even more tools and even better infrastructure at home. But on the whole, there isn't a push to come back to work.
Well, I think if we have time, we should dive a bit into that. The future of workforce and the office space. But Melissa, I want to jump to you on this first question. That technology has made 5 or even 10 years of advancements in these past 7 months. What exactly does it mean from your perspective? You're coming from a slightly different community of people who may view this differently. What's the impact of that? What's the positive and negative, and how are you all thinking about it?
And I think this may be a useful lead-in to our subsequent discussions. Many people have been focused, especially at the federal and state policy levels, on the need for inclusion for all populations, race, economic, geographic, rural versus urban. And there have been efforts and movement afoot by industry at different points in time to really try to get after that societal goals around economic opportunity, economic equality. COVID hit us all head on with just how stark the differences are in terms of racial equality, economic inequality, racial inequality. And I wanted to come back because PPP was a really interesting use case experience where I think there's both the stark reality that it was quite challenging for millions of small businesses, especially the 43 million sole proprietors, many of whom are in lower income geographies, many of whom are non-Hispanic white populations and business leaders who really struggle to get access to those basic support funds for their businesses. We actually looked closely at the role of data and the potential of using data for the onboarding processes that banks and FinTechs need to go through in order to be able to facilitate access to those PPP dollars. And so I think COVID was an important moment to show how stark the lack of financial inclusion is in this country. And I think most of us agree access to the financial system for both payment capabilities, credit access, and ultimately wealth building opportunities, that the financial system is an important on-ramp to greater equality. But just how challenging it was for so many of these businesses to be able to access the financial system. But I do think this is wherein we spend a lot of time looking at the role of data in facilitating a lower cost way in which harder to serve populations, non-traditional populations can actually be, for instance, verified for know your customer types of purposes, or ultimately, and we'll talk about this later, but for access to credit and underwriting. So I'm optimistic that this COVID moment actually shines a light on where the use of data and technology needs to really be brought to bear, so that it's not just a sort of trying to solve the COVID moment, but we really are trying to solve the longer term needs for inclusion across the board.
Yeah, I think you bring actually a perfect moment for a transition, and thank you for opening the door there. And those comments are very welcome. So let's pivot on that to something that is on everyone's mind that you just kicked off, Melissa. At a time when the United States and frankly the world are struggling with social justice issues, more and more believe that technologies, more and more believe, that the fair shot at the American dream is increasingly unattainable. and I know the Milken Institute zeroes a lot in on this topic as well. What is the role of technology and the responsibility of technology to close this gap and level the playing field? And specifically, how can it be achieved, and are there unintended costs to achieving it? I know that's a lot, but you opened up the door here, and I think we should just really dive into this right now because it's on everyone's mind. Munish, I'd like to start with you on this one, and then Melissa, I'd love to hear further comments on your thoughts.
Yeah,
Sure. So look, as most of and more of our lives move online, right? And as Melissa pointed out, it's very important to make sure that access is uniform and people have access. And to my mind, there are three key sectors where technology can play a huge role in making sure everyone has access. And sectors that are important for people to actually, do well in life. One is healthcare, education, and financial services. These are the three sectors that historically have been difficult for every part of society to access. And let's talk about how technology can play a meaningful role in each of these three sectors to make it more accessible, right? Healthcare, and I'll take an example from India, right? Healthcare in India, with the advent of telemedicine, wasn't always the case. It was hard to get a doctor, tier two, tier three, tier four cities. And with the advent of telemedicine, huge game changer. It doesn't matter where you are, you've got internet connectivity, you have a smartphone, which by the way are pretty cheap in India now. You have a smartphone, you can have access to medical help, which in the past you wouldn't have had. Drug discovery is another case in point, right? If you think of how much it costs to discover a new drug, it's north of $1 billion using AI and machine learning. That cost over the years to come has come down, will come down even more, and that's making it more accessible for consumers and making it cheaper, right? Education is the other space where I think access has been a challenge, right? And we recently invested in an Indian edtech business called Unacademy. And what that business is doing is using live teaching with a teacher, but giving access to students in tier three, tier four cities who historically, to have access to the same level of teaching, would have to move to a big city like Delhi or Mumbai. So they were effectively cut off from that. But Khan Academy, using technology, being able to transmit simultaneously, one teacher teaching 500 students at the same time, access is a big thing. So I think education is the other big space where technology has a very meaningful role to play in terms of delivering that to every part of society and is critical. Third, as Melissa pointed out, is financial services, right? And historically, again, it's been a challenge for, and I'm sure more will have views on this, it's been a challenge for legacy physical infrastructure providers to service smaller amounts of loans effectively. As a consequence, if it costs you the same amount to originate and service $100 loan as it costs you for $1 million loan, the $100 loan gets neglected because it's not financially viable for the bank that's originating and servicing it. Technology has to play a role there in terms of making that cost come down significantly lower. Also, I think, and again, this is the point Melissa made, that how you price risk and using data and using enough amounts of data, you should be able to price the nature of risk, the tenor of risk, the amount of risk, which should be much more tailored and bespoke to someone's particular needs, as opposed to trying to find a solution that is, ticking boxes and whether it fits in a certain box or not. So I think technology, if technology and companies that are spawned using some of these things that I mentioned, education, obviously healthcare and financial services, technology is a massive role. And again, I think it's about access to a wider part of society and to make sure no one is left behind at a cheaper cost as well. So there's two components for it, it's access and it's cost.
Yeah, Munish, when you look at a company to invest in, Ellie, I'm going right to you next. When you look at a company to invest in, is that a criteria? Are you thinking about their social impact? Or
and I'll tell
how do you weight that in a decision?
I'll tell you, social impact and transformative social impact happens when the underlying business model makes sense. Like, you've got to have a business model and you've got to have a company that you're investing in that will have a social impact, but that social impact will really be meaningful and will really stick if it actually makes underlying sense to all the stakeholders that are involved, including the company itself and the shareholders and the users of the company or the users of the services. So I think it is an important factor. And when we've looked at investments, our view is, where are people using tech, machine learning data to make lives better whether it's consumers or small businesses, to remove friction, to remove inefficiencies, and to give access so that the market opens up and you're actually servicing a wider and a bigger number of people.
Ellie, same question, please. What is the
Yeah.
responsibility? What is the role of technology in closing this gap? None of us want to live in a world where it's either the have or the have-nots, or any one sector of our community or humanity feels that they're not getting the same opportunity. That doesn't work long term. Maybe you could bring your view to the table here.
Sure. So yeah, of course, technology levels the playing field. I see the role of technology in general as accelerating innovation. So, and also, we should not forget that the role of technology is to make the best we can to prevent bad actors from succeeding. And the volume of bad actors that has been happening over the last, several months has gone exponentially. But it can be achieved in many ways. And we found that collaboration between companies is a true accelerator when we bring companies to work together. I can give you an example. Finastra partnered with one of the largest software companies in the world on fairness in financial services. Specifically, what we provide is a solution called Lender in a Box, and it's for community development financial institutions, CDFIs. And the whole notions there is about bringing market affordable software product that those were not traditionally available in this market segment. It isn't just a very profitable proposition from a financial perspective, so many companies prefer to serve other segments. So the solution of Lender in a Box that we provided is completely automated. It requires no automation or no IT. It's fully automated, and it helps those community development financial institutions serve the communities and provide affordable banking to the underbanked and the unbanked. That's an example of how we do that.
So serving the underbanked is also a huge theme, which I want to circle back to in a second. Melissa, because you opened up the topic, I'm sorry, no, let's, Mohit, I'd love to, if you don't mind, I'd like to have your view on this, and then we can go have Melissa close it out.
Sure. So look, I think as I look at the Milken agenda itself, right, because this goes to the heart of the program on advancing the American dream, and also over time making it a human dream or making it a global dream, right? And as Manish mentioned, it has a couple of very important components. Obviously, financial services is one, but I think financial literacy is especially very, very important, especially when, as Eli mentioned, you have so many people unbanked in the world. Financial literacy, understanding the basics of borrowing and compound interest, I think that's a critical piece. Healthcare is obviously critical, and knowledge about entrepreneurship is critical. And I know that the Milken Foundation is doing a lot to enable these, and clearly a lot get enabled through technology. So technology is the amplifier because it reduces unit costs dramatically, allows for you to use masses of data to automate it to drive insights. So if we are going to solve this problem, we're not going to solve it through taxation. We are going to solve it through limiting, sort of exports or protectionism. This problem has to be solved via technology by looking at these three key levers, right? Education, especially financial literacy, health, and entrepreneurship.
Melissa, to you.
I'm going to yield back my time. You heard me at the top on this one.
Okay.
Plenty more to share as we keep going, but I think the gentlemen have covered the points really well that I would have made myself. So
appreciate that. Let's move on a bit, back to a bit speed, technology, the pace of technology development. Thomas Friedman's book, Thank You for Being Late, talked about effectively that technological innovation essentially doubles every 2 years, but human adaptability to technology advancements is much slower than that. As an example, we've seen significant rise in the utilization of data, the development of, as we talked about earlier, artificial intelligence, machine learning. And there's no doubt that there's great benefits that we can spend the rest of this time talking about. But are we getting too far ahead of ourselves? What are the risks of technology developing at a pace and a society not able to catch up? And should we even care? Melissa, Mohit, why don't I start with you on that? or Melissa, whichever one you want to go. You're yielding up the time, pick me off my program here. So now I have to reshuffle.
I'd be happy to jump in. This is something that we're spending a lot of time looking at, in particular, where data may be especially fruitful for better risk assessment. And in particular, we have evaluated new types of data in credit underwriting. We also increasingly believe, I think most of us would agree to this, our credit system is at an important pivot point, especially as we think about COVID and the need for credit as businesses and consumers are going to be recovering from COVID, just to make sure that everybody gets to be a part of a fair and affordable credit system. But with respect to the adoption of AI and machine learning in particular, I think we have to be really thoughtful about the use cases that we're considering the use of those technologies in. In general, in financial services, expectations around model stability, model robustness, when you're using some of these more opaque approaches to analyzing data, are going to be important probably across the board. But depending upon other use cases, and the one that we're spending a lot of time looking at and actually evaluating right now is the use of machine learning algorithms, more opaque models in actual crediting decisions. And there's a lot of demand and interest both by depositories and FinTechs or non-banks in trying to deploy these more sophisticated math approaches to evaluating the data. But there's also a real need for collective understanding about the ability to explain what is coming out of those black box approaches. And that's some work that we're actually doing right now, evaluating some of these explainer methodologies to do that. I would say...
And why is it so important to bring that transparency? Excuse me, I want to just jump in there.
No, go ahead, jump in. Say that again.
Yeah, but why is it so important to have such transparency on that? What's the underlying concern?
So especially if you're talking about using machine learning algorithms in underwriting, if you're a lender, you have certain regulatory obligations. Well, one, you want to know that your models are stable and robust, even as your data may be shifting, which is what we've seen with COVID in particular. But you also will have certain obligations to explain to the borrower how a certain decision was reached. It's specifically referred to as an adverse action notification. If a credit decision or an amount of credit or pricing of credit is different than maybe what the consumer expected. So you've got to be able to articulate what drove those particular decision outcomes. So you need to be able to explain what is coming out of that black box algorithm. And then very importantly, and sort of coming back full circle to this broader moment in time where we want to see equality and fairness, and especially in credit decisioning, lenders have to evaluate themselves for a disparate impact assessment. How are they making sure that they're not reaching different decisions between different populations and protected classes? And so that's another key driver that affects this need, especially in the application of machine learning and credit underwriting, to be able to understand and explain to others what's coming out of it. And I will say policymakers and regulators are themselves also trying to quickly get a sense of how to assess the use of these algorithms when they're being used in credit underwriting or other purposes too.
Could you make the argument that the artificial intelligence model is somewhat agnostic to some of the obvious social judgments that get made, and therefore may even be a benefit and not a negative? Is that part of the narrative?
Yeah, I mean, we'll talk about this in a little bit, but I think it does very much come back to who are the designers of the algorithms that are chosen? Who are the designers of the data that are being put into the algorithms? Do you have enough collective diversity to really sort of contemplate where biases may be being built into your data selection and your models that you're using? So it's a really important aspect ultimately of the governance and the use of these machine learning algorithms.
So behind all the X's and O's, there's once again people making decisions. So Ellie, on that,
right.
I'd love to hear what your thoughts are.
I just wanted to say that Melissa is right on. I mean, if you look at eventually people write those algorithms, and there's absolutely bias in writing them. It's humans that write those algorithms. And millions of loans were rejected for black applicants in a few years. I have the statistics in front of me here. So the transparency that Melissa is working on is absolutely required when you build, a machine learning or a deep learning algorithm, because usually what you get is an algorithm that says, here's the input, here's the output, here's a churn risk, or here's the credit rating or an applicant to give them or to, a loan money to them or not. And those are black boxes. You put numbers in the beginning and you get an output at the end. What's happening there in the middle is done by humans, and humans are biased. So we got to put transparency and the ability to at least share that bias and be very clear about it with everybody who's involved in this value chain.
Is the solution sharing the opaqueness of making that more transparent in the journey, or is it actually changing the system altogether?
It's all of the above, but when you put together a machine learning algorithm, you got to make sure that you have diversity in the people that put input into creating that machine learning algorithm. Let's start with the basics, the physics of who's contributing intellectual property into this algorithm. If you start with diversity that represents us as humans, right? Races, gender, and so forth, then you'll have a much better chance of creating the right algorithm. But on top of that, we have to put some guards that protect us from malicious actors. And I got to tell you, malicious actors in this day and age, with everything that's happened with digital, are absolutely on the rise.
Can you just, malicious actors, just for all of us who are not living day to day in your world, what is a malicious actor exactly, and how do they act?
Malicious actor could be somebody who breaches into your system and penetrates it and asks for ransom. And they said, we're going to decrypt all of your data unless you give us money. That's an example of a malicious actor. A malicious actor is somebody who is biased without even, kind of being out with it, and is participating in running an algorithm of a machine learning that rates your ability, Matthew, to get a loan from a bank.
Yep, absolutely. Mohit, let me just, I know you're going to add a lot on this conversation as well. How are you thinking about this topic? The first question just was, of course, humans not advancing at the same pace of technology development. We've kind of doubled down into this topic, but please weigh in.
Sure. So look, I think this whole topic about the applicability of AI in financial services is something that we've examined at great length, right? And about a year back at Infosys, we actually worked with HSBC and Allianz, and we wrote a detailed paper on this. Clearly, the benefits are very obvious, and there are broad use cases of where AI can be used within a financial services context. The first has to do with customer interactions. The second has to do with with your core product platforms itself, and the third has to do with with the data warehousing and the analytics and the reporting pieces. And all three of them contribute very heavily towards cost avoidance, but also increased revenue potential that you have for these businesses. As Melissa mentioned, the risks are pretty obvious as well, and I'd put the risks in four broad buckets. I think Melissa alluded to all of these, but from my perspective, the risks are bias is clearly a big risk, and bias essentially comes from the model and it comes from the data. So it is something, if you want to fix it, and you also have to look at alternate or larger sources of data. But bias is clearly one big concern that comes when we start using algorithms to make decisions. The second has to do with privacy. We want to make sure that in this process, we're not exposing people's data. So that's the need to build in privacy safeguards into our AI systems is very important. The third goes to explainability, which is we need to explain why we made a certain decision. And the fact is that as humans, we make decisions, and then we go back retroactively and give explanations for why we made the decisions. Fortunately, nobody can look inside our heads and figure that out, and nobody has the expectation that you should be completely rational as a human being. But for a machine, especially now that we start using neural networks, right? Explainability is a huge challenge that we have to figure out how to solve. And unfortunately, part of it may mean dumbing down the systems, so that they don't really function at their full capacity or capability. So you've got, and finally, the fourth point is control, right? So, how do you make sure, because these models are evolving all the time, how do you make sure that you actually have control over model evolution? So, privacy, bias, explainability, and control, I think, are the four key things that you need to look at. And maybe add weight into this, right? Some of the leading or some of the more forward looking organizations really have an AI charter and a data charter in place that, in fairly straightforward, non technical language, sets out the expectations that the executive team has or that the management team has about how AI will be used in the company context. What are the broader mission objectives of the organization that it will not supersede? Having those set of common sense guardrails, supplemented maybe with ethical panels that was alluded to, I think is important because if any one of these gets breached, right, privacy, explainability, bias, and control, there are huge downsides for the organization.
But many of the larger firms that have this responsibility, however, have not demonstrated the nimbleness to be able to adapt to this environment. What role do fintech companies, smaller companies play in assisting larger ones in this journey, or do they not? How do you think about that?
I think,
I'm happy.
look, yeah, Melissa, go on, please.
No, you go ahead. I'll jump in after.
Sure. So look, what I was going to say is that you've got fintechs which are running their own businesses, and in many cases, their businesses are aggressively using, and I don't mean aggressive in a negative sense, are aggressively using algorithms to make decisions, whether it's lending decisions, and you've got tech firms like Finastra, like an Infosys, that are really providing, the tooling and the platforms to clients. And I think both of them are looking at it slightly differently. I honestly feel that at times fintechs are held to lower standards than large established financial institutions. But that's the way that's the way the world is, and that can't be changed. Larger banks and larger insurers, unfortunately, have to be a lot more careful about privacy, and bias than some of the fintechs.
Melissa, if you wanted to add on to that, if not, I'm now begin taking some questions from the audience, and I thought you might be a good person to start with, and then I will then ask Munish a few as well. But regarding regulation, should those who design AI and ML machine learning algorithms be subject to regional, federal, or global regulation? And Munish, I'd love to also get your point of view on that as well.
So it's a really interesting question. It's one that we are hearing from state regulators, as well as we know quite intimately that the federal regulators themselves are really trying to make sure that they understand how industry is using machine learning. And again, we're particularly focused in the underwriting context, and that's where most of our conversations have been happening. I think it's an interesting point to call out for everybody. Again, just using credit underwriting as the use case, we don't right now have explicit direct regulations in terms of regulators needing to know and understand what are the models that lenders are using in credit underwriting. We don't have direct regulatory review and expectations of approval of the models themselves and the way that budget regression is typically and often used in credit underwriting. I think it's a fair question to ask at this point in time, since we're talking about moving to models that may be, frankly, so much more accurate in their ability to predict risk, but also so much harder to discern how decisions are reached out of those models. Should we be thinking about more explicit regulation of those who are developing the models? But I think the fact that regulators are starting with, are they explainable? Which particular models are explainable? What are the particular vendors or methodologies that offer a level of confidence in the explainability? Starting there and then working your way backwards to consider, should we have explicit regulation, direct oversight of the models themselves? then you can start to think about that. But the precedent right now is not for the regulators themselves to be going in and directly examining and approving particular models that are used, again, in the credit underwriting space.
That's a great point of view. And Munish, I want to pull the lens out just slightly on this as an investor for you. We've clearly covered the fact that there's a lag between technology advances and adoption, but is there also a lag between technology advances and technology regulation? And as an investor, does that concern you on either side of the coin?
Well, so let's start from, let's just narrow down a little bit. Let's start from the fintech space, right? Now, I'm not a regulatory expert by any stretch of the means. The fintechs as of now, and we'll see as they get bigger and they get larger and they get more meaningful, how regulations, or how regulators inform their relationship with the fintechs. I think that remains to be seen right now. As Melissa also pointed out, there's no explicit regulation. I think some guidelines should be in place, I guess, for model usage or transparency of models or inputs that are going into models. At the Vision Fund, we have a group called the Operating Group that works with our portfolio companies and the regulators to try and help shape some of the dialogue and how these companies should be dealt with going forward. I'm digressing a little bit, Matthew, but I had one question that I want to ask Mohit, if you don't mind. And it was on a previous topic. I didn't get a chance. Mohit, incumbents, and you deal a lot with incumbents and incumbent financial service providers, right? Now, with the rise of fintechs, why have incumbents not done more on that front, in the sense they've had an advantage for long, they've had the customer base, they've had the touch points, they've had the institutional relationships. But in terms of providing a good user experience with a good user interface and making it more bespoke and using technology, they certainly seem to have lagged. And I've been curious as to why is that and what causes that to change?
The role of the fintechs, I mean, look, if you do a SWOT analysis of a fintech versus the incumbents, right, you're going to see exactly the opposite. One's digital native, they don't know what on-premise means. They were born into the cloud. They understand the concept of data, but on the other side, they don't have the trust of the customers. They don't know how to deal with regulations, and they don't have the customers yet. So it's a complete kind of 180, one from the other. So there's a lot of complementary things that those fintechs are helping. And at Finastro, we provide an open platform called fusionfabric.cloud I mentioned, where we bring fintechs so the financial institutions have a choice what type of a fraud provider they want to use, what type of a flood insurance provider they can use. So we're creating marketplaces in an open ecosystem where the banks can participate. So the fintechs play a big role in that.
It's not to say that there aren't regulatory expectations by the prudential regulators and the Consumer Protection Bureau around how credit underwriting is done and how models are used. There are prudential definitions around governance of models. It's just the specific evaluation of particular models is the piece that we haven't had explicit regulatory oversight in that way. So,
got it. Hey,
Matthew,
yes.
Quickly, I want to be on record that, while there are risks around the usage of data and algorithms and AI and all that, I'm personally very bullish on that. I'm a big proponent of that. And at Finastro, we're big. Our data strategy is big. We provide AI and ML solutions across treasury, capital markets, corporate banking, trade, cash management, retail, you name it. So it's a big deal for us. And I think that the benefits that we're getting from the usage of AI and artificial intelligence are much bigger than the risks, at least my view.
Okay. We're going to go to our last question. And let me just do a little sound check. Mohit, are you back with us, or are you still having technical challenges? Okay. Unfortunately, we're keep trying, and we'll get you back in shortly. So empathy is not a word often associated with technology. In fact, one could argue that they're absolute polar opposites. However, there is a growing chorus of voices that are saying technology is the root of our declining empathy, which is not a very intuitive thing to kind of put together. How can financial technology be used to help humanity be more empathetic? And please include examples about how you're addressing empathy within your own organizations. And I will in this case, not four, but either of the three of you, please take first shot at that one.
Melissa, you
So
need to go. You're the most empathetic.
that's right. I announced that at the beginning. I want to tell a little bit of it's a somewhat embarrassing story, but I think it's an important one for us as humans, one human to another, to recognize as we're going about doing our jobs and thinking about financial services and public policy. I tend to come back to where this conversation started around the need to make sure that we have a diverse set of viewpoints at the top and in leadership positions, and just how important that is, because ultimately empathy is about the ability to directly relate and understand somebody else or another sentient sort of sentiment. And so the story that I would tell is it was about 3 months ago, and I was having a conversation with a woman, an African American leader of a consumer advocacy organization, and we were having a discussion about data and data control and sovereign data, and ultimately, how do we think about the governance of one's personal data, and then the ability for a person to be able to share that data. And I immediately led into my own personal view, which is this going to be, what are the risks if it's going to be commercial entities that would generate or provide these sort of structural, what are called data lockers? Some of you probably know that term. And so I was offering, gosh, government is going to have to be a part of that. And I'm saying this to a woman, and this is 2 weeks after George Floyd had been killed. And in my point of view about just how much I trust and believe in government as being sort of the way to have confidence and trust in a new structure around data protection through these data lockers, was just completely contrary to this woman's point of view. That it shocked me when she immediately reacted and said, no, we wouldn't want government to be the source of the way that we have governance around the protection of our data. And it just took that kind of one-to-one human conversation for me to really be able to understand where she was coming from, and that I don't necessarily come from the same place. And so I think those kinds of opportunities where we are talking and engaging with others, especially as we're contemplating trust and our own data and how that is protected and how data is going to be used for the benefit of everybody, that this kind of experience and making sure that we are dialoguing across all communities and populations it's just a really essential aspect of how we think about the use of technology and data, and how we are going to get it right, and frankly, I hope get it better than we have in the past.
That's quite a story. And Melissa, directly it's clearly made an impact on you, but have you changed something about how you're thinking or doing your business because of that example?
We are, yeah. I mean, I would like to imagine that we have always been engaging many different points of view, and from our board, who sits on the board of the organization, to who sort of fills out the seats of the work that we do, and who are the partners who we engage in. But it's the need to make sure that we are keeping that top of mind as we make important strategic and executive decisions around who those partners and who those are engaged with us are. This is clearly top of the list. And I know that's true for many companies, many businesses, and many leaders of corporations. And I just hope that continues beyond the moment that we're in.
Ellie, just switching to you, what examples have you seen from your seat of banks being more empathetic to their communities? And same question to the rest of the group. Has Finessa delivered solutions to the community benefit? How are you thinking about that?
So, corporate social responsibility is a big topic at Finessa, and we invest quite a bit of energy in it. So, first of all, when the crisis happened in North America, we launched the Payment Protection Program. We launched a solution to enable loans to happen and people to get their paychecks in a matter of days, things that would have taken us weeks and months to deliver. We also provided, as I mentioned earlier, the solution for lending in a box. We're working with customers internationally because we're a global company like EcoBank. They process $75 million of relief transactions to citizens. You got a partnership with MasterCard and Agent Development Bank using our systems. They digitize the supply chain for 5,000 small to medium enterprises in Indonesia so they can keep them up and running. We also launched, for example, what does it do for us as a technology company? We just launched a hackathon, a global hackathon with the biggest names in technology and banks in the world that are supporting it to address system inequities. It's the whole notion of the hackathon. So we're absolutely shifting investments, changing attention, and it brought it to the forefront.
Manish, you see so many different companies. I'd love to know even how many you take a look at a year to how many you invest in. But specifically on this topic, where does empathy play a role, whether directly or related?
So look, Matthew, empathy, I think one way of getting greater empathy is get greater inclusion, right? And one of the things that's top of our mind, greater inclusion is important. And we've talked at length on this topic today. And one stat that stays with me is, look, there's a third of the adult population in the world, 1.3 billion people, that don't have access to formal financial services and don't have access to the formal financial system, right? That's massive. And a large proportion of that are women in rural households. So I think one way of getting greater empathy, of course, is by having greater inclusion. It's something that's close to our heart. In fact, earlier this year, we set up a program called Emerge, where our thinking was that we would provide office space, network, counsel, etc., to companies that were set up by minority founders, because we felt perhaps they had not, basically they had not done a good enough job. So we set up something specifically for minority founders. Initially, the intention was office space, network, counsel, etc., and then we realized, we need capital as well. So we set up a dedicated fund to back these companies. We've had 12 cohorts or 12 companies we funded. That's our first cohort out of the US. And now we've brought that program to Europe as well. So we've got a global Emerge program now where we are looking actively. Again, this is not, I don't think it's empathy, it's more inclusion and how we can use the position that we have to make sure, to the points that have been made earlier in this panel and most of them, Melissa as well, that in terms of people having equal opportunity and having access. Because we can provide a capital, network, counsel, and we're opening that up to minority founders as well and making sure that we are actively reaching out to them.
Yeah, absolutely. All right, we're down, unfortunately, to our last minute and 20 seconds. Sadly, Mohit's technology issue is not going to be resolved, so he won't be joining us. I'd like to end with just a quick lightning round of one quick question to each of you, one quick answer. Which is, what is the one thing that you've learned during the pandemic that you will hope not to forget? Maybe I could start with you and go to...
I just think confidence in our ability as human beings to embrace change, deal with it, and come out of it on the other side stronger. Whether as human beings or as businesses as well, by the way. Just that ability to embrace change, that confidence in the ability to embrace change.
Yep. Ellie?
So I've learned a couple of things. First of all, that I do have a family. And second, some of them actually like me being around the house. The dog comes to visit me a few times a day. So that work-life balance, I think it's going to make us a better version of ourselves because we're just changing the work environment. And, I'm sure everybody here is a type A executive. That's one of the things that will stay with me. And, I am more empathetic to the employees' needs. I mean, we're giving employees 2 hours once a week to deal with things. And the question is, why do you need, if you were in the office, you didn't need that time. Well, you need the time because now I'm sitting at home and the kids are right next to me. They can't go to school. So being more empathetic is the one thing that I think is going to stay with me for a long time.
We're at zero time here. Melissa, please fire away.
All of the above. Plus, tech and data were in front of us before COVID and the social unrest. I just hope the social unrest and the economic equality continue to be priorities of how we take advantage of tech and data.
So a lot of silver linings, clearly. Anyway, thank you, Melissa. Thank you, Ellie. Thank you, Manish. Sorry, Mohit, you couldn't be there for the end. What a great group. What a great panel. Extremely exciting. And to the audience for participating, we appreciate you choosing to spend an hour of your time with us. And thank you to the Milken Institute for putting on such a great event. Enjoy the rest of your day and keep changing the world. Thank you.
Yeah. Thanks, Matt.
Thank you.
Thank you. Take care.
Bye, everybody.